Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, October 12th. We are looking at Window Trader's market profile of the ES and SPY. So here we are, basically the calm before the storm over these next 3 days. As at 8:30 we have PPI coming out. 2 o'clock is the Fed minutes. Tomorrow's CPI. You know, it's interesting. PPI is coming out ahead of CPI. It used to be that way in the past. At least I remember when I was working on the trading floor. I mean, obviously, the PPI is the cost to produce the goods, and the CPI is what the consumers pay for it. So I don't know why they switched it and reversed it. But for whatever reason, they're back to PPI first. Whatever's going on in this pre-market really is pretty meaningless right now until that number comes out and gets digested. And then again, of course, at 2 o'clock, after this number sends the algos into a tizzy, when they finally settle down, then we'll get into a calm state, I'm sure, again, right before 2 p.m. with the Fed minutes. Right now, pre-market high in SPY is 361.22. Overnight low, 357.58. I said this in last night's video. I've been saying it. The market is incredibly short. Okay, that does not mean it can't go down anymore. But I haven't seen this type of bearishness in a long, long time. Everybody just keeps looking for the next crash. Again, I'm not saying it can't happen. Right now, the monthly's down. The weekly is stretched. They're balanced to the downside. I'm keeping it in balance. And the daily is certainly down. So, again, if we do make new lows today and come out of this weekly balance to the downside, well, again, all three time frames are down, and the market can get some pretty good push to the downside. There's a couple of weekly lows below us in SPY and ES that would be very easily attainable if we are to take out yesterday's low. The big thing, though, is this market in the S&P has been dictated by the short-term trader. So there's been no desire, even though we're down 24%, there's been no desire to just start ripping through these levels with huge volume. Again, that's why I think the long-term play is going to be a huge factor in this fourth quarter, whether they join the sell side or actually try to support this market if it does decide to come in. Those are things we all have to look for. So what is the game plan right now early? Well, for 8:30 and then again at 9:30. Look, the market is down right now, right? So the first things first, for the bulls, they need to take out yesterday's high. If they take out yesterday's high, it becomes a 4-day balance. Okay? Plain and simple. It's a 4-day balance, and then you have a fairly large gap they still have to attack above. If you come out to the downside, again, the weekly would go down, the daily would continue down, and you would have 2 weekly lows that are very, very attainable to go get. So, above yesterday's high, we can start looking for some long, especially if we take out the previous day's high also on the 10th, right? I mean, so if by any chance we gap higher come 9:30, well, obviously you're going to use yesterday's high as you're out. If we gap lower, you're going to use yesterday's low as you're out. Remember, there's nothing to lean on inside of yesterday except the day's high and low. Now, again, I'm in 3-tick increments in ES. We do have a wide POC here. I'm not sure how wide it is. We had the 17 wide the night before. We seem to migrate to those overnight wide POCs. But if I put it in ones, I'm not sure how wide it will be. But it's still at least 10 wide, I would imagine. So if we don't gap higher or lower, odds of trading this overnight POC are good. Okay? Below yesterday's low, I'm nothing but a seller. And use yesterday's low as my out. Above here, I'd be looking to be long because you'd have higher value. But remember, it's still only balance. Again, that doesn't mean we can't get a vicious short covering. In fact, I believe the move to the upside would be more vicious than the downside unless long-term sellers came in. Then that's off the table. But if it's who we've been having selling the market all year, as opposed to the shorts covering, the upside move would be more vicious, I believe. Again, these are early things. This market, as it's painting its picture, I'm giving it's a live webinar each and every day, my friends, for $30 a month as of right now. And then just quickly on the chart. So here's the weekly. We just stretched the weekly balance to the downside. Another new low today, and I think I'm going to go down on the weekly. Okay. Plus, I don't think we'll just stretch it if we make a new low today. I think we'd get some kind of push again, whether that's at 9:30 or at 2 o'clock after the Fed minutes, if that was to happen. On the flip side, if we start going up, it's just a huge balance, but short covering could be vicious. We've been one time framing down now 3 days out of an inside day to the downside. The 20-day moving average is at 372.80. Now that's $12 away, but with short covering, if this market ever decides to get going, it could get there in a heartbeat. Thanks for the likes and subscribing. Come check us out at camelbacktrading.org. Good luck trading today, and we'll recap at 4 p.m.